What are the key things which which drive failure for investment? Is it whether it's an angel? I think it probably is different whether it's angel or a VC.
Yeah.
And while it's always a kind of it plays out in slow motion, you have seen in the last decade or so there have been failures, right? LPs are very kind of look at it much later,
Sure.
and also the question now looms is the failure of some of the unicorns. So what in your mind, what is driving the failure of investments?
Yeah. I think it's very stage dependent. And so I think at the early stage, the causes of failure are very different than at a later stage company. At the early stage, I think it's all, the two biggest modes of failure that I've seen is number one, team implosions. And so if the founders are fighting each other, nothing will move and eventually things can collapse. Or alternatively, it's running out of money, which sounds obvious, but money is almost like the clock against which product market fit is measured, right? If you can't get to product market fit fast enough, you'll run out of money and you may not be able to capitalize further and then you'll go out of business. As companies get later and later, other things really start to dominate along the lines of, what are your unit economics? How much margin do you have and how does that impact the leverage on the business that you have? So how can you actually go about customer acquisition if you're in a low margin business, for example? It may be failure modes in terms of building out a strong team if you're in a competitive market, because then you may lose just based on speed of execution or speed of iteration. Typically, if that's your only advantage, it's not a great market. It's almost a sign of a bad market if all you can do is execute faster, but it can be really important. And then in some cases, it just turns out that the market isn't really there and you've kind of fooled yourself into it. And I think that's where the first principles of why is this a good business, who are the customers, why will they pay for this, what's the pain point that it's solving, all the obvious things, actually really tend to dominate whether something will be successful. And I think that investors will sometimes fool themselves by creating, or investors and entrepreneurs will fool themselves by creating these complex stories as to why this thing is really working when it's not. And so I think one of the toughest things to possibly do is to really understand, A, if there's product market fit, and B, if there's good underlying economics to a business.
Also seen some of these markets get saturated. If you are the 10th Bitcoin company, the 15th food delivery company, it's an issue, but you are typically investing very early. So.
Yeah, and I'm happy to invest. I guess one other way I think I differ a little bit from an angel is I'm happy to invest later if I think there's still at least a 10x in the business or it's like a fundamental company. And so a number of the companies that I've invested in over time, I kept re-upping. So for example, in Stripe, I invested in their A and their B. In Zenefits, I invested in their seed and then their B. In Gusta, I invested in their seed and then their A. So in different companies, I've continued to invest along the way because I've just really believed in them. And ultimately, if something's working, I think you want to continue to support that company if you can.
And what about the spaces? I think you've invested in more exciting spaces and newer spaces than kind of traditional VCs. Not just, although you've done some SaaS and you've done some enterprise, some consumer, but you've done a lot in biotech, in AI. What is it that excites you about that?
Yeah. So within the sort of biotech side or healthcare side, I've actually tried to be very selective in terms of even the subspaces that I go into, because I think most of healthcare investing is really bad, or most healthcare opportunities are bad because of the structure of the market. And then I think that traditional biotech I traditionally avoid because I don't know as much about it. But I focus on some genomics related things because I think there's a wave of change happening there. And then I focus on some digital health or data driven healthcare companies. So that would be things like Nuna or Eligible, or on the genomic side, it's like Carius or Epinomics or companies like that, where on the genomic side, they've developed a fundamentally new application or use of genomics in interesting ways that I think is differentiated. And then on the digital health side, it's really looking for people who've generated real customer traction, often very little. I mean, both of those companies at one point or another had basically been bootstrapping off of revenue. But then also create like a data-centric service, which I think is a place that you can really differentiate still in healthcare. I've completely avoided things like a traditional drug. I've completely avoided things like tools for doctors because the buying behavior there is really odd. So I've tried to actually stay away from big swaths of those areas because I think a lot of the areas are actually bad, again, from a market perspective.